Not only is this my first time speaking about Solo, but I suspect it's also Solo's first outing at any conference. The company's been around for 5 years in its current form for the last 3.5 years, but it's not been a conference animal to this point. Why are we picking to speak today? Well, I hope that will be evident from the presentation. On that, I'll just move straight into it. We are, of course, an AIM listed company. I didn't check our market cap this morning. I don't. I tend to assume it's around about £10 million. We are, according to our brokers, somewhat undervalued, and that's a message I'm sure we all say all the time, and certainly the current market has tended to amplify that. What's unique about Solo is, in my mind anyway, and what distinguishes it from other vehicles that I've been associated with in the past, is it chooses to be a non-operator. It is an investment vehicle in oil and gas, but as a non-operator. Currently, we have a major 25% stake in the onshore Ruvuma Basin in Tanzania, and that will be the focus of our presentation today, where we had a discovery at the Notorio-1 well, which produced on test through a 1-inch choke at 20 million standard cubic feet a day. That basin onshore portion that we have has recently been assessed to have over 5 TCF of resources, and I'll cover that in a little more detail. We also participate currently at a 28% interest in an enhanced oil recovery project in Canada. This project was acquired to give the company a cash flow, and that's coming to fruition at the moment. So, as I mentioned, I think this is a slightly different business approach from many of the presentations that we make as CEOs. We deliberately choose not to operate on the ground. Our aim is to select undervalued assets. We have no geographic limitations on that because we exploit the knowledge of the current operator and their skills. We're not trying to replicate those. Our work is, if you like, tabletop rather than on the ground. We're trying to use our shareholders' capital to crystallize value in those, and we'd like to find an opportunity where our capital is leveraged in the venture. I would say in Tanzania we've been very successful at that, and I'll come back and explain why I say that. It does mean that we have to monitor the operator very closely, and this is where there is a downside. It's a cheap operating model. I only work on Solo on a part-time basis, as do the rest of the team. You're not duplicating work, but at the same time, you don't have your hands on the levers of operations, so that there are limitations to the amount of control that you can exercise. The current board is very small and very slim. David Lenigas, name very familiar to you all, founder also of Lenigas and Oil, for which I'm the CEO. Myself and one non-exec. So it's a very slim board. It's very nimble in its ability to operate in this low-cost environment that we've chosen. Okay, well, with that as a framework in which we're working, let's look at our 2 current assets and start with the one that has the most excitement, certainly for us, I gave a interview to Proactive Investor. There's a video on our website, and I should also say this presentation either is or will be by the end of this morning's session on our website. We tend to avoid printing it out and distributing large numbers of copies, but it is accessible through the website. Tanzania is very familiar to people now. Won't spend very much time on this. East Africa went through a very long period of not much attention, and over the last 5 years or so has really attracted the industry focus. Our two PSA licenses, they're bound up in a single PSA. Lindi and Mtwara are onshore largely, about 80% of them are onshore. We have been through a 50% relinquishment and are in the second exploration period now. We originally entered as solo for a 12.5% interest by farming into the first well, the Lukonde well in the Lindi license. We paid a 50% premium to farm in. We were paying 18.75% of the costs of that well, a well which was successful in demonstrating that there was a working play system, but not in itself a commercial discovery. We subsequently increased our equity to 18.75% through the progressive exit of Tullow Oil, who found these licenses to be non-core to them, and eventually at the point where we had met the commitment to the license in its first exploration phase with the Notorio 1 well, they exited, taking our interest to 75%. The balance of the PSA is held by Aminex, who have the other 75%. Two bullets there talk to the recent discovery and the resources report that we published, and I'll come back to those separately. But the context also very important to us, certainly, and to the value of this holding is that we are very close to existing infrastructure, deepwater port at Mtwara, and at the end of a pipeline which is planned to take gas from this area up to Dar es Salaam, a pipeline approved for construction with Chinese money. I'm not going to spend any time on this. I think this is all now very familiar to people in this room. Offshore, very large gas discoveries, particularly in the Mozambique portion of the Ruvuma Basin, but increasingly discoveries are now being made in the Tanzania portion. And what we've done with the Notorio 1 well, and indeed with the deepest section of the first well, Lukonde, is prove that that gas fairway extends onshore. More details of which will follow. Why is this a good place to be? Well, from our portion of this basin, we're in what I would call hinge line geology. There are sands coming into this part of the basin at all times. You know, it's either marine, or it's deltaic, or it's lacustrine, perhaps, at some periods, but there's always sands passing through this area. We're on the hinge between the deep basin and the upland area, and at all ages we're seeing sands come in. So we have multiple plays and multiple reservoirs, and that I'll show a stratigraphy chart in a minute that just amplifies that point. But we do have very limited 2D seismic data. Seismic data, of course, is quite expensive to acquire onshore. The flip side of wells are quite cheap to drill. So at this point, we have limited control, both the 2D seismic, but also with only two recent wells, Lukonde and Notorio, and one older well within the PSA boundary at Lukaledi. The first well had excellent shows. It had 250 meters of sand with residual oil shows, and at the very base of the well, we intersected a high-pressure gas zone. It was at the absolute limit of the rig's capability, and ultimately Tullow, who were operating at that time, decided that we needed to abandon that well for safety reasons. We haven't re-entered down to that depth. The second well was required to be in the other license of the PSA in the Matwara block to the south, and we drilled the Notoria well, partly as a follow-up to the tertiary section that had 250 meters of sand. We went too far towards the pinch-out and had no sand at that level, but then when we deepened the well into the Cretaceous, we were successful in finding gas. Correlating all of those two wells together and understanding the prospectivity has led to this view that there is in excess of 5 TCF. We've also found some condensate. The well produced condensate, but also we have shows throughout the well section that shows that there is some oil moving around in this system. So it's not purely a dry gas that we're seeing. Looking at this, and I'm told if I put my finger on here, it works. Yeah, indeed it does. Up here, the large offshore discoveries are all in the tertiary. Slightly older, the producing Manazi Bay field, and Notoria actually extends our knowledge down into the mid-Cretaceous. In this part of the Ruvuma Basin, nobody has yet successfully drilled a Karoo accumulation, but obviously the Karoo Formation is a well-known reservoir, and if you can find a trap at that depth, which certainly our seismic doesn't currently give us the ability to do, that will present a further target again. Notoria was on the feather edge of a channel, 25 meters or so of gross pay, only 20 meters of net, but good quality sand with a 20% porosity. We perforated the upper 3.5 meters and then went through a usual test sequence, ending with a 1-inch choke and this 20 million standard cubic feet a day production, which came along with 139 barrels of oil a day in the form of a condensate. So a successful test from a relatively thin zone. We have mapped that out, and we're confident, certainly in the light of the test results, that this is the edge of a larger accumulation. Currently assessed as 178 BCF of proven gas, but potentially quite a lot larger. There's that figure of 178 for Notoria. However, it's right on the edge of a much larger feature shown here in blue, which is close to a TCF. Well, these are not huge numbers, but I think you have to remember that we are on shore here. Wells cost of the order of $10 million. We're 25 kilometers from existing gas infrastructure and from the end of the planned Dar es Salaam pipeline. So our cost structure makes these volumes very attractive and probably early mover in the sense of the ability to put those into a pipeline. There are other prospects, some as large as multiple TCF and a number of other leads. But with this density of seismic, we will need to enhance our knowledge before drilling further wells, and indeed that is planned. What we are allowed to do within the PSA is allocate an area that we wish to appraise. It stops the exploration clock from ticking and gives us 2 years to come up with a development plan. And that's what we've applied for. That's that red box there, which includes not only the proven portion of Notoria, but also the up-dip portion. Incidentally, because of the form in which you are to apply for appraisal areas, it also includes most of the Lindy feature at Le Conde as well. This map just tries to bring this point home about gas infrastructure. The pipeline picture in the middle, which I borrowed from a Wentworth presentation, is not real, and that's why it says illustrative only. They haven't started building this pipeline, but they do expect to start building it in early 2013. It is approved, the finance is all in place, and it is intended to be a feeder pipeline from Mtwara up to Dar es Salaam. And we sit right on that. So these relatively small proven volumes have ready access to a market with a significant amount of demand. So what are our next steps? Where are we in the process of commercializing this interest? I said before that we feel we look for opportunities where we can leverage our capital. What we have done with this is not only have we shown that the onshore portion has gas potential, not only have we got a almost certainly commercial discovery, but for a 25% interest, we have spent only 15.3% of the capital that has been expended in the PSA. So we have a negative premium on our entry. So whilst we paid a 50% initial premium, through a number of events, we've been able to utilize Tullow's expenditure to raise our percentage at virtually no further cost. So we're now sitting on a 25% interest. That's enough for us to consider farming down, bringing in a new partner, and jointly with Aminex, who of course have similarly advantaged their capital, we will look to do a joint farm down. We are in the process of selecting an M&A advisor at this stage, and we would expect that process to run through till the end of the year. In order to enhance our understanding both of the appraisal area and the likely projects for drilling, we will also be shooting some more seismic. People count seismic in different ways, but about 1,000 line kilometers of new seismic will be acquired later this year as well. That will allow us to adequately define 2 further exploration locations. I've shown you a map already with prospects on it. Those will be refined, and we would expect to drill those 2 wells probably back-to-back sometime in the second half of 2013. And we'll also, in parallel with that, be considering where to place an appraisal well and finish off a development plan for Notoria within a 2-year time frame. But as I say, that area gets carved out of the exploration license and no longer forms part of the relinquishments that are required there. There will be the need to commercialize this through gas sales, and that process and the pricing for gas in this part of the world is part of the unknown here, which is why we have to keep saying this is potentially commercial. At the moment, we don't have a gas sales agreement, so it's hard to know what price we would have. But based on what gas is trading for in the area, we feel reasonably comfortable that Notoria, even at its current 200 BCF level, will be commercial, and certainly if the upside recognized in the resource evaluation report is present, then we will have the ability to commercialize this. So moving on to our other project, fairly quickly, I've used most of my allocated time on Tanzania, which was what I intended to do. This project is on the shores of Lake Huron in Ontario. Southwest Ontario is an old producing province, the oldest producing province in Canada, but it's a very small younger sibling of Alberta in terms of what happens today. What we have are a number of reefal features. They're old Ordovician reefs, very easily defined on 3D seismic, and this map on the right just shows that, as does the seismic illustration on the left here, which just shows how these reefs stand out from the background. They're very easily identified. This core, which comes from the Ozable 5 well, which we drilled last year, shows the kind of reservoir we're dealing with, relatively low porosity, vuggy carbonates, and this one actually, you can see here, is oil stained, which is typical. Some of these reefs are oil bearing, some are condensate bearing, and some are gas bearing. A lot of them are known to be hydrocarbon bearing, but are not yet developed. We have been developing the Ozable reef with our partner Reef Resources. If you simply pump the oil out of these, you don't get a very high recovery. I mean, that will be in single figures. There is no energy in this system. These reefs are at about 600 meters, 2,000 feet, and they are very low energy, very little pressure in them. So what we've been doing is moving from, that's my reminder that I need to be getting there. We're moving from a beam pump operation to a downhole Venturi system for raising a lot more fluid from the wells, and we're repressurizing the reef. There was a lot of gas blown down from this reef during early production, and we are pumping gas back into this. Gas that we have from other wells within our concession area, but also we've been buying when prices are low, and Canadian gas prices are very low at the moment, from the gas utility to repressurize the reef. There are analogues for this process which gain oil recoveries of over 80%. So we can look at most of the value here being in the gas cycling. The project has gone slower than we'd hoped, but I think it is now at a point with a potential to produce significant amounts of oil. We've done the engineering, the work that's required, and there is the resource potential there. We're confident of that, and we have good well results. It's connecting up the plumbing in a way which will yield the right results. Why have we taken so long? Well, in large part because we want to get it right here at Ozable, because there are 5 or 6 other of these features that we would like to go and chase up on. There's a portion of the 3D survey here. We have a very extensive 3D, lots of these reefs, and once we have the template, engineering template right, we can roll this out across a number of other features, and that's where the value ultimately will lie. We think that production should reach around 500 barrels a day gross in early 2013. We had hoped previously that would be somewhat earlier, but it is better to get it right first time. And we also have the option to increase our 28% holding up to 38% holding, an option that we're still yet to exercise. So in very quick summary, nothing I haven't already said, we have an exploration track record now in Tanzania. We've extended the gas fairway onshore. We've also got some hints that we may be looking at a liquid-rich portion of the fairway. We probably have a commercial discovery at Notoria. There is significant upside. 5 TCF offshore in deep water would not excite us, but 5 TCF onshore certainly does. And we're looking to accelerate our work there jointly with Ammonex by bringing in a new partner through a farm out that will be launched shortly. In Canada, cash flow positive in 2013, and this magic number of 500 barrels a day, sliding a little bit out of this year, probably into early next year, but we're well on track for that now. There are no new engineering barriers that we have to overcome, and the upside potential there is in repeating this on other known reefs. There's no exploration risk here. We're just simply taking the engineering solution and repeating it. And then finally, Insolo was set up to eventually participate in a number of similar ventures. Remember the model, non-operated, you access the skills of the existing operator and you leverage your capital to advantage through whatever means is appropriate. But you do need to spot opportunities that fit that. We have 2 at the moment. One is, I think, in Tanzania, is very demonstrably a good fit to that and has been highly successful. Reef Resources, we will see whether we make these production targets before really the jury will know on whether that was a good investment or not. And that's what I had to say.
Good. Thank you very much, Neil. Any questions, Sam? Questions? Yeah, Amy.
Is there a timeline on the option in Canada, and on what terms can you increase your equity there? Yes,
the terms are agreed. In fact, the price was fixed. We've taken one tranche of about 5%, and there are 2 further. There is a slight escalation for delay, but it is only an interest rate escalation, so the price is fixed. So that can be exercised at our election.
Okay. Just there by James.
Thank you. Mr. Ritson, could you describe briefly whether you're working with Wentworth, Moreland Prom, and Cove in terms of getting gas contracts and what the dynamic might be? Where's the gas going? Is it going to Songo, or what's happening in that score?
Right. I mean, I'd put on my non-operator hat and say we are having conversations with Ammonex about the best way to go forward there. Notoria was only completed 3 months ago, and we've only very recently had the issue of the ISIS report, the 5 TCF and those numbers. We now have the confidence to go forward into those negotiations, but we won't be expecting to lead them. There is, as you know, a small gas-to-power facility already for Manazi Bay at Mtwara, and that may be a first entry point for some new gas. But essentially, the real value will be when the pipeline is built, and that's going to be built by the Tanzanians. So we'll see how that emerges. So at this stage, there is very little gas sales negotiation ongoing, but it will be kicking off shortly.
John?
In relation to your upcoming farm-out process on Notoya, could you say whether Ammonex is prepared to pass operatorship in order to widen the potentially interested number of parties, please?
Yes. We have had preliminary discussions with Ammonex about the form the farm out would take. We've agreed to farm out jointly in order to give the maximum amount of flexibility in terms of equity available to a new entrant. I would say we will be offering between 40 and 50% to a farminee, and along with that must go the operatorship if that's desired. So we will remain flexible in order to get the best for the current participants. Aminex will, I'm sure, make their own views known, but I would think that in the right circumstances, what we're trading here is a 40 to 50% participation for as much work program as we can get. You know, if operatorship is a trigger to a good deal, we'll certainly look at that.
Rob.
There is evidence, Neil, of some oil in the onshore Ruvuma. Traces on the first well that was drilled. I think that was residual oil, and I wouldn't say old wives' tales, but accounts of oil shows at surface in various places. And you referred to multiple sand formations going back into quite distant past in that area. Insofar as one can guess at these things, what do you think the chances are of there potentially being an oil accumulation onshore Ruvuma? Because lots of people have found gas, particularly offshore, of course, where they've been drilling, but oil would be the real prize if you could find it in the Aminex and Solo acreage.
Yeah, we used to think that gas would be unattractive. Now, having found gas and seen the development of the infrastructure, of course, we're not at all upset to have gas available to the market at this time. The fact that there was condensate in reasonable volume in Notoria is also very advantageous to the economics. Ultimately, finding an oil-only pool, I think if that is going to happen, it will happen in the Karoo formation. And so far, we've not had enough seismic to define a drilling location in the Jurassic. So for now, I think it has to be a speculation. But the presence of condensates within the gas is probably has more to do with mixing of oil and gas than it has to do with primary source. So we are encouraged, but we can only speculate on whether there is an oil play to be pursued.
Any more questions? Oswald.
You said absolutely nothing about your finances. I assume that if you were to acquire other opportunities of a non-operating basis, you would need to go to the market to raise additional money.
Oh, absolutely. We're funded for our current activities. As the flyer says, we went out in August when most people thought there was no money available and raised $1.5 million for our current operations to give us a strong enough balance sheet for the farm-out process. You don't want to be in too weak a position at that point. But any new opportunity that Solo chooses to pursue would require the raising of further funds. At the moment, with our share price not reflecting what we believe is the underlying value, that is something we would choose not to do. But down the road, when we see some response in the share price to, for example, a farm out with carried interest in Tanzania, we may be back in the game of looking for new opportunities. We did look at an opportunity in Argentina. There was heads of terms announced at the end of last year for that on an all shares basis. The opportunity did not transpire. It fell apart in due diligence. But so we keep looking, but this is not a good time relative to our current price and our expectation target price once we are able to fund the Tanzanian exploration through a farm out to be raising substantial amounts of money, or indeed using our shares as a trading collateral. So probably you won't see a new portfolio addition to the company for at least another 3 months.
Good. Thank you very much, Neil.